You've heard it 1,000 times. The housing market is in a bubble, and there's no way that prices are sustainable at these levels. And in the past, we've also heard the same thing about Bitcoin. The Bitcoin price plummeted all the way down to $20,000 after reaching its highs of $69,000. Well, in this universe, these two investments might be on the brink of further collapse as the recession warnings are looming. Have you ever wondered how the housing bubble and the crypto bubble are correlated and sort of what one means to the other? Well, we're going to go ahead and dive right into that today. But before we get started, my name is Mac. Welcome to Cryptstars Taking, your #1 source of crypto news on the tube. Welcome to the beautiful house here in Portland, Oregon. You can see we have a great deck. We went ahead and renovated the deck. I don't know if you can see it. We have this really great vine sunroof. So nice, right? So much nature for you guys to enjoy while you watch this awesome video. So yeah, just before we get started, I am not a financial advisor, so take everything I say with a grain of salt. Make sure to do your own research and to figure out what fits your portfolio and your risk profile. Let me preface this video and let you know that I really strongly believe in the real estate housing market. Real estate has been proven to be a very safe haven in troubling times. And it is a lot less volatile than cryptocurrency and other investments. A lot of times these other investments, they're very volatile and the price can go up and down and up and down, but you know, real estate is relatively safe and it usually goes over long periods of an inclined slope and then goes down in price and goes up and down, but it's much longer periods of time and a lot less stressful to go ahead and hold real estate. Now, property units are usually on high demand and it's relatively easy to go ahead and purchase a property or sell a property. It just takes time and a little bit of effort. Governments also offer really great opportunities to get mortgages and to get loans at reasonably good rates. And in the past, we've all been told that, you know, debt is the devil and you shouldn't have any debt. Well, in my personal opinion, I believe certain types of debt are really bad, like credit card debt and consumer debt. However, certain types of debt are actually really good as investments because you're actually borrowing money to make more money than the interest rate that you're actually paying for the borrowed asset. Now, with that being said, there are also many downsides to real estate investing, and a lot of people are really scared of another real estate market bubble crash, just like what happened in 2009. So this fear is still really real for many people who experienced that crash back in 2008, 2009, and also makes people feel a little priced out of the market right now. You also add in higher mortgage interest rates, which is what happens when the Fed goes ahead and raises their interest rates. It forces banks to raise mortgage interest rates, which in turn basically crashes the housing market, right? So let's go ahead and talk a little bit about blockchain and summarize what the blockchain is if there's any viewers out there who don't really understand that. So basically there is a blockchain, right? You have Bitcoin, you have Ethereum, and you go ahead and make a transaction. And every time there's a transaction, there is a new block of data that's added to the blockchain. Blockchain is like owning a property without having a middleman. So you kind of cut out the middleman and you can choose to sell this cryptocurrency on the market at any time. And if the value increases, then you can go ahead and sell for a profit. If it decreases, you sell for a loss. So it's kind of easy to see now why a lot of people are taking cryptocurrencies quite seriously, because it basically makes a trustless system between two parties. It's actually a problem that the humans have been trying to solve for hundreds and hundreds of years. So let's go ahead and jump back into real estate and talk exactly about how cryptocurrencies and real estate relate to each other. So much like happened with the stock market and the real estate market in the United States in the mid-2000s, these two investments are highly correlated with one another. And you can expect that if one market crashes, that the other market is also very likely to crash. The cryptocurrency market is one of the most volatile markets. It's the most likely to kind of crash first. It's much riskier because the asset value increases a lot more, but the asset value can also decrease overnight, like go poof and all your stuff is gone, right? Because it's a 24-hour system, it has the power to go ahead and go up and down overnight. Whereas the housing market, you know, it's limited by a lot of things. You know, a house is really big. It takes a lot of time to do the paperwork and to go ahead and sell it. But with cryptocurrency, it just happens sort of instantaneously. So recently, the home sales have actually dropped from 3.9% in 2020 to 2021. And the median home prices have jumped by about 19.6% from 2020 to 2021. Now, the housing market is the simplest form of supply and demand, and there's still a ton of demand on the market for houses. Let's go ahead and talk about the 2008-2009 stock market bubble and see what conclusions can be drawn from there. So the 2008-2009 stock market real estate housing bubble collapse was caused by over-speculation as well as exuberant spending to the point of collapse. Now, usually this begins when the demand for housing rises and the supply of housing collapses dramatically. So basically the scenario starts off like you have a lot of houses and you start selling the houses go up in price, demand goes up more and more, causes the price of houses to go up much more than they should over a set period of time. And this is called a bubble. So at some point, the demand for houses decreases exponentially, and the supply of the houses on the market increases a lot, and this causes a huge bubble crash and causes the bubble to burst. So yeah, in the mid-2000s, the United States experienced this really crazy market crash, and this was greatly due to a few factors that were very specific to that time period. And the main reason the housing market crashed was because the government encouraged homeownership by having a soft or unregulated pre-qualification standards, and the loans were given out by many institutions who were unable to pay it back. While it's relatively safer than other investments, the housing market is also prone to bubble popping, and this chain of events basically trickles into a lot of job losses. As the Fed increases rates, people lose their jobs because companies cut costs, people have to go ahead and sell their houses, increases the housing supply on the market, and this kind of goes into the rest of my story today. So let's go ahead and talk about how cryptocurrencies and the real estate market are correlated. So yes, over here we have real estate, over here we have Bitcoin, and in the middle we have the Federal Reserve and the economy. So let's go ahead and say that we had a huge equities market crash and a huge Bitcoin crash just a few months ago, right? Back in, I think it was February, March, just basically this whole year has been a complete red market. However, we haven't quite seen the housing market bubble collapse. The thing is, the housing market bubble collapse, this is actually a signal to the Fed that people are losing their jobs, which means that they're doing their jobs and battling inflation, because the output of decreasing inflation is actually job loss. And when people lose their jobs, what is one of the first things they have to do? They have to sell all of their excess mortgages and sell all the excess real estate that they've purchased, trying to go ahead and make more and more money and doing a lot of speculative purchases. Well, they're gonna have to sell those because they can't pay their mortgages, because interest rates raise because the Fed raised their interest rates. So let's say, for example, the Fed does end up raising interest rates from 2.5 all the way to 5% or even 7%. If they're trying to battle core inflation at 7%, they'll need to raise the interest rates by another 2.5% in the next 6 months or so. Now, this would put even more damage on the equities and the Bitcoin market, but it would also cause the housing market to collapse because more and more layoffs would happen. So you see Coinbase, you see Apple, you see Google all coming out and saying, hey, we're slowing down hiring. You see it in the news, you see it on Yahoo News, all these different websites. You can see that the hiring is starting to slow down. And the next stage is the firing. People start getting fired and basically cutting out all the loose ends for all these big corporations. We're going to see even further decline in the equities and in the stock market. But we're also going to see the housing market collapse. A lot of people are saying, hey, the housing market's pretty safe, it's a really safe investment, but it can still crash 10 to 20% or even 30% if the Fed continues to raise rates the way they have been. So yeah, that's pretty much it for my explanation today. I really hope that helped you guys understand the correlation between Bitcoin and the real estate market. If you think, the housing market isn't going to collapse for any reason at all, please just let me know. I'll go ahead and do some research and come back to you guys with another video. But from my research that I've done, this is kind of what I see is going to happen. Anyways, you guys have a great day, and I'll see you guys in my next video. Peace out, everybody.
Bro, we need to pump it. Everybody, go to Twitter and hashtag the things. Pump it. Pump it real good. We need a good pump. Everybody deserves a nice Tesla.